Hey everyone, it's Aisha and welcome back to my channel. I can't believe it's already Wednesday again. I feel like the weeks have just been flying by in 2020, but maybe that's just me. I also got this little suspended fake plant, which I think is adorable, and it's now the centerpiece for my coffee table, but I just felt the need to share it with someone, and I got it at Publix, which is crazy. However, today is not about the plant, so we'll get into the topic at hand. So last year I made a video on FHA and some of the biggest changes to the FHA program that came out of 2019. I did want to make an amendment to that video and talk about some of the big changes that are happening for FHA mortgages and the people who are buying through the FHA program in 2020 as well. The FHA program is so prevalent to not only me, but the people who watch my channel and people who are getting started in real estate, because the FHA program actually provides a way to buy a home without having to put 20% down, which can be a significant amount of money. It's a government insured program that basically assures lenders that if someone isn't able to put, as much as 20% down, that they should still be able to get a loan, and the government's basically guaranteeing it by insuring that loan in case something does go wrong. And with FHA, you can actually put as little as 3.5% down, which is huge. Well, not huge, but which is a big win for the people who are borrowing through the program. That video has done well, and I wanted to make a new part for 2020 because since COVID has happened, there have been some major changes that definitely affects the FHA loan program and those who are borrowing through it. But before we jump in, feel free to like this video as it does help how my content performs. I would really appreciate that. And if you like the type of content I put out, feel free to subscribe to my channel. I put out weekly content about real estate and rental properties, especially for beginners. So let's jump right into the biggest change for the FHA loan program in 2020 so far. So COVID had an impact globally, and especially in the US, it has led to widespread employment, and jobs are only now starting to pick back up as the world opens back up again. But even with the rehiring, there are still a number of people who are either unemployed or are waiting on some sort of unemployment assistance, as the government basically has a huge backlog on processing unemployment claims. Personally, I know that's a huge problem in Georgia. Like, the Department of Labor is so overwhelmed that there are people who have been unemployed basically since March and still have yet to receive unemployment. It's a huge issue down in Georgia, and I'm sure it is across many other states as well. So with unemployment and without any type of money coming in comes the inability to pay your bills, and one of your biggest bills as a homeowner is your mortgage payment. There are government entities and programs that are trying to help borrowers make those payments to those lenders and banks, but it seems like a wave of foreclosures is still a very real possibility in the future. Because a lot of borrowers are unable to make their mortgage payments right now, it's making lenders really worried. So what lenders are doing, they're tightening their qualifications on who can actually qualify for a mortgage payment by basically raising the credit score needed and other things. By raising that credit score, there are a lot of people who are right on the edge, the fringe borrowers who are just about to be approved and are now going to be unable to get a mortgage for the foreseeable future. So technically this isn't FHA itself. FHA's requirement is you need a 580 credit score minimum to be able to put that 3.5% down. But even then, they allow people who have a credit score as low as 500 to be able to get a FHA-backed loan as long as they put down 10%. So the issue here is that lenders aren't required to make those same minimums as FHA. So while on paper it may look like you can qualify for FHA, you may be hard-pressed to find a lender that will lend to you with that credit score. Lenders' credit score requirements are often much higher, as much as even 100 points higher. So you may have a credit score of 580, but a lender may not want to lend to anyone under a 650, for example. It's a huge impact on the pool of people who qualify for FHA, because the purpose of FHA, one of the purposes, is to be able to provide, homes and home loans to people who have less than ideal credit and have less than 20% of a down payment. So you think to yourself, isn't this silly right now for lenders to do? Because wouldn't tightening requirements actually make them a lot less business, because now they have a smaller pool of applicants that would be able to qualify for their new standards? Technically, yes, but there's another factor at play that we haven't even discussed yet, and that is the record low interest rates that are set right now. Mortgage rates right now are going for almost 3%, which is pretty much unheard of and is super low when it comes to mortgage interest rates. That means there is a whole new pool of people who had been waiting to buy a home because they wouldn't be able to afford the monthly payment that comes with a higher interest rate. So now that that interest rate is way lower, they are now flooding lenders with new applications as well. Now with the influx of supply of applications coming in, it allows lenders to be more picky about who they pick and choose, and they really aren't losing that much business. You know, the risk of having someone who looks like a risky borrower because of a lower credit score isn't worth the reward, since they actually have a whole pool of qualified applications coming in as well. They don't feel the need to, risk themselves on this other borrower. Like I said, this affects FHA very specifically because the type of people who apply for FHA loans are people with less than ideal credit and people who don't have a lot of money to put down on a home. So now that they're being kind of shut out for a lot of lenders because they don't have a now higher credit score requirement than they previously thought that they needed, they are unable to get a mortgage loan. This will probably ultimately result in a lot less FHA loans being processed this year compared to previous years, so it'll be interesting to see how it plays out for the rest of 2020 and beyond. As I mentioned before, I made a video in 2019 that talked about some major changes to the program that restricted some people on one side and opened up a lot of previous restrictions to allow new pools of applicants into the FHA loan program. So it'll be interesting to see if they do anything to balance out what is happening in this year. And with that, that is all I have for you guys today. If you have any questions, please let me know in the comments below. And like I said earlier, if you found this information helpful, please like the video as it helps me in how my content performs. With that, I hope everyone is staying safe, staying healthy, and I hope things are going well. I will talk to you guys soon.